everyone, and welcome to the ninth episode of ETF Ke Funde. Till now, we have talked about what is passive investing, what is ETF, what is the advantages of ETF, and how to buy and sell ETF. In fact, in the last episode, we talked about various types of ETF. And in this episode, I'll be talking about various parameters which are important if you are thinking about investing in ETF. In previous episodes, I may have already covered some of these points, but we thought why not create one more episode and talk about all the concepts at one go. But if you want to, let's say, dig much deeper into the nuances of, let's say, tracking error and tracking difference, there's already an episode, which is the seventh episode, which just talks about the tracking error and tracking difference. And you can probably get more information on these concepts in that episode. So here in this episode, as I said, I'll be summarizing the parameters which are important for ETFs while you are deciding to invest in this particular investment vehicle. So I'll break it down into two parts. One, parameters which are important for ETF as a concept, right? And second, what are the trading related aspects which you should bear in mind while buying and selling the ETFs. So first of all, let's talk about the concepts of ETF and what are the things which you typically don't hear when you're doing a mutual fund investment, but you do hear when you're talking about ETFs. So first one is tracking error and the second one is tracking difference. And we've already discussed that in the episode 7. So tracking error and tracking difference tells same thing. It tells how well an ETF is replicating the performance of an underlying index. And now we have heard it multiple times that the objective of an ETF is to give returns and performance similar to the underlying index on a daily basis. It should track the underlying index on a daily basis so that any investor, whether he enters at T date or T plus 5 date, exit at X plus 1 date or X plus 10 date, he gets the return which is equivalent to the index return. And this return is always total return index, which is price return plus the dividend return, which ETF gives. So tracking error tells you how well the ETF is tracking the daily movement of the index. So from a formula point of view, the daily difference of returns of ETF and index is calculated. This difference of returns of ETF and index, the volatility is reduced by using the standard deviation, which tells you how volatile is the difference. And if there is no difference, the volatility is 0 and tracking error is 0. But if there is difference and difference keeps on increasing somewhat and decreasing somewhat, there will be some volatility and that will result in a tracking error, right? And higher the tracking error, the poorer is the ETF in terms of giving you returns which the underlying index is giving. So this becomes a bit more complicated for a layman to understand, but in a very simple language, the tracking error tells you how well on a daily basis the ETF is tracking the movement or the performance of the underlying index. The tracking difference, whereas it's a much more simpler number, it talks about between point A to point B, what was the return of the ETF and what was the return of the index and what is the difference between the two. It just gives you from a point to point basis what is the difference in the returns. And again, higher the difference on either the positive side or the negative side, poorer is the ETF. Third, next two are related to the pricing and the NAV. So remember, unlike the mutual fund or the index fund, you do not buy or sell ETF at the day close NAV. You purchase the ETF based on intraday net asset value. At always, you will never get a transaction which happens at the day close NAV. Most of the ETFs, the transaction will always happen at the intraday pricing level. And in order to gauge whether the intraday pricing levels, whether the price at which you are buying the ETF or selling the ETF is right or not, you should look at indicative net asset value, or also known as INAV. It tells you what is the current INAV or real-time net asset value of the ETF based on the underlying security's current valuation. So at 12 noon, if there's a Nifty 50 ETF, all the 50 stocks of Nifty 50 will have a value at 12 noon, right? Because of the price movement. Based on that price movement, the Nifty 50 ETF real-time net asset value is determined. So if market is, let's say, roughly down by 1%, or Nifty 50 index is roughly down by 1%, the Nifty 50 INAV will be roughly down by 1%. And this INAV, which we lower by 1%, will give you a base price or the reference price around which you should execute your order. You won't be typically able to execute the order at the INAV itself, but because, as I mentioned in the previous episodes, this is the naked value of your portfolio. It does not consist of transaction cost and taxes, etc. So it typically get quotations around the INAV, but it serves as a base price. And this is a very important concept and parameters which investors should always be aware about whenever he or she is buying the ETF, because otherwise you don't know whether the price at which you are buying is right or not, and buying at, let's say, a higher price will eat into your returns. And lastly, the transaction price. As I mentioned earlier, unlike mutual funds or index funds, typically whenever you are buying or selling ETF, you do it at the intraday pricing level. If you're buying and selling on the exchange, the price at which you get the ETF matters, the price at which you sell the ETF matters. Frankly, NAV at the day close doesn't matter if you are buying and selling on the exchange. Now, in this slide, just highlighting what the tracking error and tracking difference is, you can see that index is in blue, the ETF NAV is in red, and that is how well ETF tracks the movement of an underlying index, right? You can see that it's almost superimposed, right? Because the cost associated is so low, and the intent is always to invest in all these stocks forming part of the underlying index with a weight which is as close to the index weights as possible. And that is why typically in most of the good ETFs, you'll find such good superimposition of movements. ETF replicating the underlying index movement to the X decimals. And even then we look at these X decimals to find out what the tracking error of the ETF is, right? We always think that we can do better, and the difference can be zero, if not almost zero. And here in this particular slide, you can see that tracking error is around 5 basis point, even though there's hardly any difference if you're looking at the graph. Whereas tracking difference is 10 basis point, which is the return of the ETF and the index, right? You can see at the end that the difference between the closing values, if you're talking about this period, is 10 basis point, and that is the tracking difference. So tracking difference is simply the difference in the return of ETF and total return index, whereas tracking error, as mentioned below, is the standard deviation of difference in the daily movement of ETF versus the total return index daily movement. Now, lastly, and I hope that you had time to go back and view the episode in which we gave a demo on how to buy and sell ETF. And all these pointers are basically discussed in more detail. So in case you want to go ahead and invest in ETF market, do look out for that episode where we give the demo on how to transact an ETF and have talked about a lot of nuances which goes into buying and selling of an ETF, right? You need to be aware about that, and once you do it, it then becomes very simple to transact in this particular investment vehicle. Now, whenever you're talking about trading, you should always understand, and I've mentioned it a couple of times, that ETF will trade at intraday prices, and hence the pricing at which you are buying and selling becomes much more important, and that is why you should always check it against the real-time net asset value, which a lot of AMCs publishes on their website. Second is about the order execution. Once you have identified that the pricing is right, you should check whether my order can be taken care by this particular ETF. And for that, you can simply look at the order book. You can go on the exchange and look at order book, or you can look at the order book on your broking platform also, because they also show you the order book, and there you can see that if you're, let's say, putting an order for 5,000, 10,000, or 50,000 ETF unit, is the order book strong enough to execute the entire order at the price around the real-time net asset value, around the INAV, right? And then thirdly, you should look at the bid ask prices and see the spread which you are paying. If INAV is 100 rupees 50 paisa, and if you're paying 101 rupees 50 paisa, you're paying 1 rupee spread, 1% spread almost, which is significant, right? And typically you should avoid paying such high spreads. And in these three, I'll again like to point out, and this we have already discussed when we were doing that demo on how to buy and sell ETF in one of the episodes, that always use the limit order when you're buying and selling ETF. Use the INAV as a reference price, then around the reference price, put in the limit price at which you're comfortable to buy and sell ETF, and then execute your order. It will ensure that all your entire quantum is executed at the right prices and it doesn't breach your limit price, right? And lastly, if you want to look into more details while selection, you can also look at the volumes which are happening in an ETF, and better the volume, better is ETF from a liquidity point of view. But again, I like to emphasize that order book is more important than the volumes, because volume may have happened, but there might not be any market participant right now who is providing the quotations and liquidity at right prices. That you typically get to know by looking at the order book. So order book is always, from an ETF point of view, more important than the volumes which has already happened in the ETF. While I must say that ETFs which have typically higher volumes typically have robust order book, but do always check the order book whenever you are placing the order. So this was all about parameters and concepts which are important pertaining to ETFs and pertaining to trading in ETFs. I hope in this episode you understood those parameters in more detail, and this will help you in buying and selling of ETF. We'll be coming out with more interesting episodes on ETF soon. So please stay tuned. Till then, thank you and goodbye.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.